Well, China's abrupt exit from strict COVID restrictions appears to have caught many off guard. Experts warn there could be more economic disruption as the outbreak worsens. While the latest figures painting a dim picture, factory output slowed to 2.2% on year last month. Declines in retail sales deepened to 5.9%. Unemployment, meantime, rose to 5.7%, which is the highest since May. Now, Gary Ng, APAC Senior Economist at Natixis, joins us now. Gary, with COVID infections spiking and concerns of major disruption to economic life, is the situation in China going to get worse before, some positive signs start to emerge?
Indeed, I think it's quite likely that we will see more short-term pain in the Chinese economy and before we actually see the long-term gain. Especially, I think the data that we see today pretty much confirm why the authority needs to change. Because if you look at consumption, it's not doing well, and because mobility is falling, jobless rate is also rising. People do not have confidence to actually spend, and even if they want to spend, there's not really that venue because there's lockdowns everywhere. So I think this pretty much confirmed that we will need to see more turbulence in the short run.
Yeah, and November's economic data, points to flagging output and demand, and we're also seeing home prices continuing to slide despite those support measures from the government. So when do you expect to see a reversal? When do you expect to see those support measures take effect?
I think rather than the only sole factor of the zero COVID, actually the property market in China is actually facing more problems than only lockdowns. So far, the measures has been focusing on helping the developers to actually get more liquidity, which basically means that banks will be more willing to give them loans, and then it's much easier for them to issue bonds or raise equity. But it doesn't solve that fundamental problem that demand is still rather weak. Home buyers do not have the strong confidence in terms of the future market, so why would they want to buy it right now? So therefore, I think it will take a while, even after China reopens, to actually see this rebound in the property market. And especially right now, we see that the sentiment within the economy is not that well. And in the short run, we also will have this basically peaking infection curve coming up in the next 3 months. So I think it would take at least 6 months to see any positive sign. So we will be waiting for at least the second half of next year to see a more meaningful rebound in property sales and investment.
Meantime, Chinese leaders are meeting. What can we expect from China's Central Economic Work Conference?
Indeed, I think the focus of the government right now is really on how to control the pandemic amid the reopening. Because if we look at the streets in many cities in China right now, basically even the official count is not rising that much. But indeed, there's a lot of people getting sick. So it seems to me that that will be the focus. And for the economic work conference, basically it could be delayed, and then of course we will see the usual measures from both the fiscal and monetary policy to actually help with the economy going forward. But for now, I think that may be delayed a little bit, and then but we will see the usual infrastructure investment, more tax cut for household. But this will not be able to solve every problem in the economy, because I think at the end of the day we need to wait for the whole economy to actually normalize, which is what the world has been doing in the past year.
And Gary, in the meantime, how all this bode for the rest of Asia, as well as the many countries that rely on China as a key trading partner?
Indeed, in the short run, it's possible to see China importing less because the demand from consumer, demand from property sector, and even for different construction projects that may not be able to go on. So therefore, for commodity exporters within Asia, it can be a bit of difficulties. However, if we think of it, let's say 3 months later, indeed, reopening China will be quite positive for Asia, because we will be seeing more the tourism outflow again from China into different market in Asia, for Japan, Thailand, Hong Kong, and even Singapore would benefit from that. And of course, eventually, when demand pick up, it would also mean that China import could actually increase cyclically. So I think for the rest of Asia, it's pretty much the same story at what is happening in China right now. There could be a bit of pain in the short run, but 3 months later, I think we will see a stronger demand.
All right, many thanks for that, Gary Ng there from Natixis.